So the pound, who could forget that bullish move that we saw from the 122s all the way up to breach the 130s? That has pretty much kept its technicals largely in bullish territory, especially the main technical indicators. Its price above all its main moving averages, its DMI positive, and its ADX, average directional index, showing an ongoing propensity to trend. However, since then it's been relatively range bound. The data last week wasn't necessarily that supportive, but a lot of these moves then again were based on the fact that we would have a reduced likelihood of a no-deal Brexit, especially with the latest early election polls. However, if we want to look at it from a trader standpoint, where exactly have traders positioned themselves? What we're going to do is we're going to map it onto the price chart. You've got retail sentiment, blue dotted line, COT sentiment according to the latest COT report released last Friday, and green dotted line as a percent long bias. And you can see that there's been a bit of a convergence between the two. Initially, retail traders were holding an extreme long bias near 80%. COT bias was an opposite, a near exact opposite, 80% extreme short. And since then, COT traders, they were obviously on the wrong end of this move. They started to close out shorts and start initiate pound longs. They've reduced that extreme short bias from 80% to about 63%, as is the latest report. When it comes to retail traders, they took profit significantly on the run up. And why wouldn't you, right? And since then, however, when we see this next move that has gone up towards 130 again, we see that they've been taking profit and pushing sentiment closer to the middle. In fact, if we do see another pop higher, it's not unlikely that we could see sentiment shift back amongst retail traders to a majority short again. So those of you out there, good luck this week.